The Federal Reserve's decision in March to leave interest rates unchanged has split Wall Street into two groups. The first, the no landing camp, believes strong job growth and a thriving stock market will keep the Fed from cutting rates later this year. The second group expects the Fed to make 3 or 4 more rate cuts this year due to progress in reducing inflation and signs of an economic slowdown. On March 20th, the Fed provided some guidance on its future rate decisions. Fed Chair Jerome Powell suggests that rate cuts are still possible. This could have been surprising to the no landing camp. However, the Fed's projections might indicate fewer rate cuts in 2024 and 2025 than previously expected. That surprised the soft landing forecasters. The Fed aims to balance stimulating the economy by lowering rates without fueling excessive investor and business optimism. Powell has emphasized the importance of the first rate cut, as it can signal future cuts and impact market expectations significantly. Market expectations suggest a 59% chance of a rate cut by June and a high likelihood of at least 3 cuts by the end of this year. Despite this, some analysts believe the Fed may be cautious due to concerns about financial conditions and the stock market's performance. Since December, economic conditions have changed. GDP and job growth have exceeded expectations, and the stock market has reached new highs. Some Fed policymakers are worried about overly easy financial conditions and the risk of high market returns boosting inflation. Recent inflation data suggests that the Fed may need to revise its inflation projections upward. However, the Fed remains focused on achieving its 2% inflation target. The outlook for the economy remains uncertain, with conflicting indicators such as strong job growth, but signs of weakness in small business sentiment. Some economists predict the Fed could make multiple rate cuts this year, while others believe strong economic performance could lead to no rate cuts at all. We'll continue to keep our eyes on changing market conditions, government policy, and economic indicators as we manage your portfolio accordingly. Thank you for the trust and confidence that you've placed in me and my team.